Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look at the gold market. Despite the recent volatility that we've got on the Fed statement, during the Fed statement, gold follows our bullish scenario very accurate. So on the euro currency, it's a bit more difficult price action was, but on the gold, despite that we've got the first reaction down as market has treated the this dovish statement actually from the Jerome Powell as not dovish enough, you can see that this retracement on the gold market was very, well, not very significant. So it just returns back to our 2030 area that we have specified as the first entry level. On the daily chart, despite that we see here some spikes and returns very big down, this market can't show any acceleration. The performance of the gold here stands in opposite direction to the performance of the dollar and euro currency. So it just the fact that market doesn't show big downside acceleration and just keep creeping higher indicates that some demand for the gold stands and gold has some inner power to continue upward action. Probably here some kind of the geopolitical background exists, because as I already explained yesterday, usually when you see that dollar rising together with the gold and when the yields are dropping, so you can see on a actually 10-year yield, it's probably I closed already this chart, just show you this is dollar index. So if we'll take a look at 10-year yield, you could see that the yields has dropped yesterday significantly, but despite of this, this dollar shows upside action and gold shows the same dynamic. This is 10-year yield. You can see what has happened on the statement of the Powell yesterday. So that actually led us to not bring any vital changes to our trading plan. We still have the bullish context. It's now based not only on the grabber that we have on the weekly chart, but also on the trend direction on the daily. Despite that, for now, this upward action doesn't look very impressive, so we don't have anything of this kind by far. But still, this is well, I think that it's important and inspiring performance compared to what we see on other markets. On the 4-hour time frame chart, I just for some case keep this downside ABCD that we already talked about, but this is mostly, well, just because it's nominally it is not destroyed yet totally, although of course currently we're not considering taking any position with this passion by the reasons that we already discussed many times. So you can see market not just has broken through this resistance. This was 20-40 hour vital area for the bears. It was able to stay above it, not return it back down. This action, guys, by the way, this performance yesterday confirms that we were correct, that this performance was not a kind of the wash and rinse on the bearish performance, but it was only reaction on the reached OP target. Once reaction down has completed, market was able to stay above this important support and shown the upward action. So despite that this was nicely looking engulfing, and we said that maybe 2020 area also might be considered for possible taking a long position, this action has not happened. So market just erased this pattern. Now situation stands a bit more simple. You can see with this byproduct of the recent Fed statement, we have two bullish grabbers, and this suggests the taking out of this stop. Here's market also stands near the 2055, the major and last one, 618 resistance area. I mean, last one for a short-term setup. Right there, so here's will be relatively free space back to the top of the 2090, which is actually, as you understand, the target of our weekly pattern, grabber minimum target. So here's, you probably could also recognize a kind of the butterfly here. It's probably, you can see some extensions around this area as well. So maybe 21 will be reached with this butterfly starts working and so on. But for now, we're interested with the entry moment, how to take the position with these grabbers. It is not really very difficult. So if we'll take a look at the hourly chart. Here's, guys, I just keep the yesterday's levels, so they are not valid right now because market created the new top, but just to show you what has happened. So you can see we have talked about this support area to consider for entry and this one. Once again, those who split your position for entry has got not bad results. So first of all, market has shown upward action immediately. Now downward action once again is a chance to take the position. But for now, since this level already has been retested and we have the grubbers, we probably should consider some support areas inside of this most recent swing. I do not have the levels here. I think that you could do it by yourself. And potential, take a look. We have opportunity to get the butterfly. So with the 1618 extension, it perfectly fits to the XOP target around 2070. So very probable that catalysis will become the barrels. If it brings some worse employment, it could hurt the dollar and could support the performance of the gold market. So that and towards what we have on the gold market, invalidation point for current setups probably stands below 2030 because currently market has no big reasons to show the big collapse below this area if it hasn't done this in the previous situations. Currently, it's even less reasons to do this. And let's keep watching. So obviously, no need to say that we're not considering taking any shorts by far.